Let's get a move on then and discuss the way forward when it comes to the entire pharma sector in terms of where the heavyweights are placed right now, what the outlook is on the export momentum, US sales as well. We've got Vishal Manchanda, Senior VP Institutional Research at Systematix Group, joining in to discuss the same. Thanks so much for taking time out. I just want to understand from you first up, given that for most of these generic API players, there has been a bit of a weak set of numbers near term, do you expect this pressure to continue when it comes to revenue growth? And any specific company that you want to highlight, if any?
So lately we have been witnessing pressure in generic APIs. So pricing pressures in generic APIs, which seems to have been triggered by probably competition and competition coming from China specifically. So if we look at import prices of certain specific APIs, we have seen drop in prices on a quarter-over-quarter basis. Some of these APIs where prices have come down are basically those wherein we have a PLI scheme running. So probably this is trying to undercut each other. So we'll have to wait and see how long this lasts, but probably it might last a few quarters at least from now.
Vishal, pharma, we may like it, we may not like it, ultimately follows a cycle. I've seen best of the so-called specialty players, they also go through ups and downs of volatility and pricing. Which are the 2 or 3 categories within pharma? And I'm breaking it for our viewers, Vishal, which is, let's say, injectable, oral generic, CDMO, where price trends have bottomed out.
Right. So if you look at the injectable category, we are seeing increasing competitive intensity in the injectable category. There are companies which have announced their plans to become larger in the injectable space. Even the existing larger players are adding capacities to become much larger than what they are today. So we are seeing new entrants, the existing players adding more capacities. So I think for the next 2-3 years, the injectable space probably is going to witness further pricing pressures. On the oral side, I would say with this new API prices, so this new trend, API prices starting to come down, we might see that trickle down into oral solid pricing also. Because once API prices come down, formulation players have no choice but to bring the prices down, as competition would move that way. So while we were assuming oral solid pricing has bottomed out, but probably it also depends on how API prices behave. So if API prices continue the way they are, and if it gets more broad-based on the API fronts, like more number of molecules seeing price declines, we'll see that also reflecting in the oral solid pricing. But from a competition perspective, I think oral solid pricing is pretty close to the bottom. There is no further room except if API price is correct. There is a potential oral solid pricing might come down.
What is the sense of Chinese API prices? Because if they perhaps turn around, that could reflect a recovery globally too.
Right. Yeah. So that would dictate the final pricing of the formulation, the API prices.
So let's break it up again. The most complex is injectable. Then you've got, actually the most complex would be specialty pharma. Then you've got injectable. Then somewhere CDMO fits in. Then you've got generic, and then you've got oral generic stroke bulk drug. Which are the companies which one should bet on if the cycle is really reversing?
So I think fundamentally it's best to bet on the specialty piece. So when I say specialty, I mean companies that are focusing on innovation. So innovation by nature can provide companies a much larger scale. So I think at least if you want to pick a name in the larger among the larger generic companies, we should focus on companies that are doing specialty, because for their scale, if they want to grow from there, they need to have a specialty business. Generics probably won't allow the growth that these companies would aspire to have. So that's where I think on the companies that are basically global companies would need to get into specialty. While if you want to kind of look at another another segment within the industry, I would probably look at CDMO. So that's where I think that's currently a smaller segment of the overall Indian pharmaceutical industry, but that can scale up meaningfully from the current base that they have, the CDMO businesses.
CDMO, can you be slightly more descriptive? Because that's the buzzword. Laurus, DVs, suddenly research brokerage reports are now talking about a tailwind and a new trend which has started in CDMO. What is CDMO and which companies will benefit because of this?
So CDMO is basically the innovators, the innovator companies of the world. So whether it is biotechs or the large global pharma, they outsource R&D to kind of companies, to smaller companies. So basically, when I say R&D, it can be any segment of the R&D. It can be discovery, it can be custom synthesis, and it can be large scale manufacturing. So various companies are positioned within various segments. So some are positioned on the discovery side, while some are positioned on custom synthesis, while there are companies which are positioned across the segment. So Syngene is one which is positioned across the segment: discovery, custom synthesis, large scale manufacturing. They're also into small molecules. They're also into large molecules. So with that kind of a positioning, you get a you can basically work with a larger base of clients, and you can always get work because you always have positioning in various segments, so you can continue to build on your base. So I think Syngene is one name I think that's positioned well in this CDMO space. I would rather say the best position.
If you have to pick from the top 5, which includes Sun Pharma, Cipla, Dr. Reddy, at least the top 4-5 names.
I'm just restricting to the CDMO name. So if you look at the large CDMO names in India, we have Syngene, Divi's, Newland, Suven Pharma, Dishman Carbogenamsys. So these are the listed CDMO names in India. So among these, I think Syngene is one which has a larger growth opportunity.
Question, independently of where the businesses are, where do you see there is, for an investor, there is a combination of P multiple expansion and earnings growth? Where do you think that in next 6 months, next 12 months, this is one pharma company where there is scope for P re-rating and also earnings surprise?
So I think the P rating has already happened for the sector, and at least for the larger names, I don't see a further re-rating there. So I think earnings surprise can largely come from the pricing, how prices behave in the US. So as we are all anticipating, the pricing situation in the US will improve from where it is today. So that's the larger driver of the earnings surprise. I don't really see any other triggers from an earnings surprise perspective. But as I pointed out in the beginning, specialty companies. So Sun Pharma is probably the only core specialty play in India. That such kind of companies can always surprise on earnings with their patented assets doing better than what one would be building in their numbers. So one is pricing in the US, and other is specialty portfolio surprising on the upside.
All right. Thanks so much then for sharing with us the all-round view then on what the outlook is when it comes to the entire pharma sector.
If you like this video, then like, share and subscribe to ET Now.